Hi, I'm Peter Akerley, President and CEO of Erdene Resource Development. We're listed on the Toronto Stock Exchange and the Mongolian Stock Exchange, and we're focused on developing a new gold and minerals district in southwestern Mongolia and on the cusp of first gold in 2025.
And I'm Alex Black, Rio2, building the Phoenix Gold Mine in Chile, and we're on track to make that happen and to be seeing our first bar of gold in January of next year.
Oh, nice, guys. Lovely to have you back. The band got back together. And Happy New Year. Happy New Year. Are we happy? How are we feeling, Peter?
Very happy, yes. Yeah, looking forward to 2025. I think it's going to be a great year for gold and commodities in general.
Okay, Alex, come on.
Yes. I mean, I could be dressed up as the Grinch, but I'm not. Today I've got a yellow shirt on. But yeah, let's see.
You put out a great announcement today. Honestly, you've got nothing to be miserable about. I'm not going to let it happen. Let's start with the kind of macro on gold, because we've got a bunch of people looking in at mining. I'm trying to persuade them as to why they should invest in mining. Macro story for gold at the moment seems positive. Price is high. Is there anything we should be worried about, Peter?
I don't think there's anything to be worried about. I think that worried about the geopolitics of the world, which is the underpinning of a stronger gold price. Central banks will continue to buy. Interest rates and inflation, a bit of a contradiction there. We'll see where that falls, but I think central bank buying and geopolitics really underpins the price of gold. I think the U.S. debt situation and the unleashing of more of that by the Trump administration should also be a strong support for the gold price moving forward.
Right. And what else do you look to, Alex, in terms of that kind of macro stuff, in terms of like currency or price fluctuation, etc.?
Yeah, I think, look, 2025 is going to be a wild year, whichever way you look at it, given what's happened in the US. And, I hope I hope it's a little more sedate than what I'm predicting. But anyway, no, with the US dollar being as strong as it is now, and probably likely to get stronger, I guess, given what may happen over the next 12 months. You're seeing currencies fluctuate, and when you look at the Chilean peso, which is currently at about 1,000 in comparison to the US dollar, it was 800 when we did our feasibility study back a year and a half ago. So that's worked in our favour. I think the same with the Mongolian. What's the Mongolian?
The two rig, which is about 3,500 to 1 today.
Yeah, and I think that's gone down in respect to the US dollar over the last few years. So that works in well for us foreign miners doing business in a different country. The other thing that I watch, and obviously because one of the biggest cost inputs for a mining company like ourselves is the oil price, and what's happening at the moment is oil was sort of sitting around the high 60s there for a while. It's now broken into nearly the high 70s. So that's a negative there for us miners. Is that just a temporary sort of spurt, or is that something that's previewing what's coming up? With Mr. Trump's drill baby drill, whatever that means. I mean, nobody really knows what that means, but does that translate to a positive regime for a lower oil price going forward? I just don't know. But our biggest cost inputs are labour, which obviously the currency is a good thing there, and fuel. So they're our big inputs.
How much of your power generation is generated on the fuel side or the oil side, Alex?
Yeah, I mean, in the case of Chile, that's correct. If you look at Peru, a lot of it's hydro. Yeah, it just depends on where all the power is coming from, but it depends on the country.
You guys don't use any solar?
Oh yeah, so I mean, solar has had a big push in Chile, and a lot of the mines are building, adjacent solar farms to generate electricity that augments their power requirements, and they can feed that into the grid. So yeah, solar's a big thing in Chile, obviously.
Right, and just like you both at similar stages, and it's kind of, I think it's going to be quite exciting for you guys in 2025 because people are focused in on advanced development stories. You both in the construction stage at the moment. You've come at that in slightly different ways. I mean, with MMC kind of funding this for you, Peter. How do you engage with that? Do you sort of sit back and try and make sure they're on the schedule, on time? Because you can't control any of that.
No, very engaged. So the subsidiary that operates the build or manages the EPC is jointly controlled by our team and their team. So we split an executive team of 4. We have put in place the CEO and the Chief Development Officer, and then the CFO and the Chief Operating Officer. So it really is day-to-day operations, observing and managing the EPC contractor. So very active.
Right, but you've chosen that specific model because companies of your size would have struggled in the markets of the last 3,
absolutely.
4, 5
and
years.
to dig into that, to dig into that a little bit further, as we've talked about previously, our expertise and our success has been driven on the exploration side, and theirs on the build and operate side. So we do respect and recognize they're taking the lead on that. And as we move into operations and out of that EPC, we'll see that dependency of our involvement lessen, and we'll get back to what we really want to be focused on, which is that exploration side, which is the strategy here. We have made a decision not to go out there and dilute massively, but to wait the cash flow so that we can explore this very exciting new district, and our team can get back and focused on that front.
Right, and Alex, I'll come to you because you've obviously chosen again a slightly different model from that. You've started with a kind of bigger project. You've reduced the size of that project to make the kind of funding because the problem that you both tried to solve for in this market is how the heck do I stay relevant, and how the heck do I continue a growth story in a market which has kind of almost given up the ghost in a way. You said, right, we will raise the money, but we will then have to make sure we're not one of these stories of the last 2-3 years where projects fall over. So contract management, supply chain management, all of that stuff's going to be very important for you. So how have you gone about setting this up?
Well, because we've done it before. We've built two similar mines before in the last 10 to 15 years, and we've got the same team together. We're doing it different to what a lot of bigger projects would do with EPCM contracts and all that sort of thing. We're actually managing the build of this project ourselves, and we've formed alliances with the construction contractor and with the civil and mining contractor to move the project forward and to go through construction. So it's all an alliance is the best for project concept, where you sit down with the contractor, you come up with a plan to take whatever work program you've got forward, and you share in the risk and you share in the benefits of doing that. And it's non-conflict. I think in our previous press release prior to the one today, we announced that we had come to an agreement on a fixed price for the construction of the processing plant, and so we're all working towards that. If we do it better than that, then we'll share the benefits with the contractor in whatever we come under in respect to into that budget. So we're doing it a little bit different, but you can do that with a smaller capex. When you're going to a big, hundreds of millions or billion-dollar project, you need to bring in big engineering companies. You need to do EPCM, and that comes at a cost. And going back to what you said about what we're planning, what we did by cutting this project back to a starter project with a modest capex, it was about doing that, but also it was about becoming self-sufficient, because this market is so unpredictable, and you don't know where the next dollar is going to come from. I mean, we were successful last year with a couple of good financings, etc. But we were in the windows open and closed very, very quickly. So becoming self-sufficient comes from generating cash flow, And once we can do that, we can remove ourselves from this market, even though we're in it, and forget about it, and just put our heads down and generate cash. And that's what most investors want to see. It's what they want to see with these big producers. It's what has turned the big producers into more attractive investments for a lot of the generalists. So that's where we want to head in the best way we can.
I thought the extraordinary thing when I read the press release today was it feels real. This is you believe
it is real.
But do you know what I mean? It's quite easy for lots of explorers or early stage developers going through the economic study phase to kind of just talk a game. It feels, ethereal in a way from someone, because they've never done it before. Mm-hmm. You've got a 565-man camp being built with all the plant equipment and support. Has been built, right? Okay, so it's just it's all there, and there's more being built. And you're talking about a January production timeline. You're talking about starting off this smaller project at 100,000 ounces at its full run rate, etc. These are real people doing real things. And people need to kind of maybe appreciate that this isn't just a paper exercise anymore.
Well,
this
I think
is
that's what
close.
I think that's what Peter and I and similar companies are dealing with. It's this lack of belief, right? I mean, people don't expect junior resource companies to get to where we are, right? But we're there. And we were saying, as you know, Matthew, I've been on this program for a long time, over the last 4 or 5 years. And I've been saying, we are going to become a gold producer. We are going to become a gold producer. And we've done it before. And so it shouldn't come as a surprise, but then people go, wow, you're actually there, right?
It does.
And that's the weird thing about it. It is kind of surreal too. I mean, let me tell you, I'm not at the coal front. I'm not the one that's pulling all the levers, etc. Andrew Cox, our CEO, is doing most of that. But then you've got our execution team. So for me, who visits the project and I see all this going on, it is quite surreal. And you go, wow, we're actually doing this. But that's what we've committed to do. That's why we raised a bunch of money last year, was to put it into the ground and to do this. So. Yeah, it's what, and it's what, and I've said this I don't know if I've said it in one of your interviews, but in a previous interview, I've said the intention of every junior resource company should be to find a deposit of something, whatever it might be, and to build it themselves, right? Not because too many people talk about, wow, we're going to build, we're just going to grow the resource, we're going to grow the resource, and we're going to get taken out. Right? That doesn't happen. That doesn't happen. And, even the ones that have got a strategic shareholder that comes in and takes 9% or 19% of the company, that doesn't mean anything either, right? It doesn't mean anything. So you've got to have, as a junior resource company, the whole objective and the ability to demonstrate to the market that you're going to build that project, whatever it might be.
Yeah, I just find this a kind of fascinating period, where you're not only things getting built, but you've also got to have those plans, that regimented planning in place for safety, workforce management, risk diversification, or contingency planning, or all that kind of real-time monitoring stuff that that all needs to be factored into what you're building out here. And I guess that's why companies like both of yours are being rewarded for getting to this stage and not hoping someone's going to take them out. It's really interesting times.
I mean, I still do, I sort of agree or disagree, but we're still not being rewarded for it. I mean, I've got a project that we're going to build at 100,000 ounce run rate at the current gold price, has got an NPV of about $800 million. And the market value of my company is currently less than $200 million, right? And it just goes sideways, right, for most of the time. Now, will we get a re-rating as we get closer to production? I don't know. You would expect we would, but we're not getting the recognition for where we're at yet. I don't think, and I don't think Peter would. I think Peter.
No, I would agree with that. I do think gradually we see that re-rating starting to take place as we get closer. We're 6 months away from that first gold now, so people are starting to recognize that. But we've seen a move in value from, I guess, September of last year to today of about A double. We were hovering in that 30-cent range and hit as high as 60, 70 cents over the past few months. So it's coming. It's coming slowly, not as quickly as I'd like it, but yeah, it's taking place.
Okay, well, maybe then this would be a very good time to actually talk about, give reasons why investors are perhaps not invested into metals, precious metals, or indeed they're kind of focused down on the kind of high risk, high return, explore co space. Why advanced development stories? Why companies like yours in terms of that kind of risk return reward are probably better for people in a market like this to be focused on. So, if I look at clearly, you've demonstrated, proven resources and lower exploration risk if you've got exploration as part of the mix here, and indeed near-term production. But what are the other kind of factors for you, Peter, which you think people should be honed in on?
I think off the top, you have to look at the specifics of the character of the deposit or discovery. And in my case, when I looked at Mongolia, we had to have something unique. It had to be high grade and/or a very large size, or ideally both. You need something that sets you apart and drives those economics, and those are the two fundamental things that do that. Beyond that, you have to look at that team and the experience to be able to find things repeatedly, or to be able to build things, or both. And then, very importantly, is where do they go from here? Even if you look at a major mining company who has 8 years left on a 300,000 ounce per year development, it's no different for us. We have 50, 100,000 ounces. How are you going to keep that train moving? How are you going to fill that pipeline? Where's that growth opportunity? And I think, that's probably what sets both Alex and I apart in this, when you're comparing to peers, is we have a brand new district. I mean, we've decided to build a foundation with Bayan Khundii, but there's expansion opportunities everywhere. This will be a multi-million ounce camp. We've got expansion around the mine site. We've got Altan Nar. It's a very exciting place. So those factors, I guess, off the top of my head, is what would drive me into investing in a development company.
Right. And I've kind of in my head kind of got a bunch of stuff that I think about and look to when I'm working out whether to invest into something. So in terms of, I would start with kind of the growth plan and whether there's a kind of clear growth plan here. So, I mean, Alex, when you sort of look to things like, in fact, you've talked about, maybe there should be a re-rate when you go from developer to producer, but things like delivering on project timelines or any additional exploration upside as, or increase in production. I mean, how do you view those things? Or how would you portray those things to people looking in?
Yeah, I mean, look, that's all part of it. In our case, we're already starting with 5 million ounces. There's not too many deposits around the world that are just sitting there with 5 million ounces in M&I, within an $1,800 pit shell, right? Which is yeah, so we've already got 5 million ounces there. What we have to show is the path to expansion, which we'll do during this year. That was part of the announcement that we made today, was the fact that we've started our expansion study now that we feel a little bit more confident about where the potential water solutions will come from for the expansion. But also we've started the EIA, and we're EIA experts in Chile, as everybody knows. So we've started the EIA on the expansion project. That should go pretty straightforward because of the fact that most of the infrastructure for the expansion projects within the existing project footprint. It's a matter of showing all that. Unfortunately, and Peter's doing exploration, which is great. We're going to start exploration after we get to production because we're starting with that 5 million ounces. But what I see in the market, and we're all on Twitter and we see what's going on there. Most of the reaction is to drilling, right? People that are drilling and coming up with drill intercepts are the ones that seem to get the recognition, irrespective of the fact that they're nowhere near production, or they'll never ever build a mine, or it'll never become a mineable ore body, right? So that's the strange thing. But it's this gravitation towards drill results. So I think, once we start doing some more drilling, maybe we can, add to the resource base from 5 million ounces to some other number above that over time. That will attract people to what we've actually got. And if we do some M&A and we acquire other assets that we choose to explore and to put into our project pipeline, then that could help as well. So the market's a strange thing, but it's a small universe, right? And it's a small tension base that you've got out there about what we're doing, not Rio2, but we as the companies that are within that sector. What are we doing, and how they react to it, right?
Well, I think the numbers suggest that the development stories and the producers are the ones accessing capital in terms of pure volume terms. I think that's where the attention is, and whatever is happening on X. And I like X, but therein like madness lies. So there's a lot of very vocal people, but maybe not a lot of new money being deployed. And so, and coming to that point, what we're seeing is a lot of producers buying other producers, or buying existing ounces, new ounces. I mean, do you think new ounces should be valued differently? Because if there's no new gold coming through, we've got problems coming down the line.
We are seeing a very low valuation put on ounces. When you look at our company, for instance, we're on the edge of a couple million ounces of gold. But when you do when a third party does a valuation on that, they put all the value on the upcoming production and maybe $20 or $30 an ounce. Maybe you get up to $50. But here we are at close to 2,700, and I think both of us did our feasibilities at $1,800 gold, and we're getting paid $50 an ounce, or credited $50 an ounce for those extra resources. So yeah, I'd love for that to change. How you go about changing that, I'm hoping, Matt, you can figure that one out for us.
Well, it's just when I looked at things like, with existing production where you've got kind of declining grades and aging infrastructure and operational inefficiencies and so forth coming down the line, and I can name a few companies that can tick all of those boxes. There, they need the new ounces, and that's why I'm intrigued as to why they perhaps aren't valued as well as they are.
I think they eventually would get the valuation that they deserve. Although I think, what all the big guys, they just sit back and watch, right? They watch us guys, right? They watch us go through what we say we're going to do to see whether we're going to get there, et cetera, and then, so I think even though there's not a huge acceleration of growth in the resource base of some of these big majors, they still have the time to sit back and watch and watch how companies like Peter's and mine and others perform and where they actually get to.
Okay. And can I just sort of make you sort of look back to 24 and 23, where we had quite a few blow-ups in terms of economic studies from one to the next. The numbers kept changing, the cost profile kept changing, the recoveries, kept decreasing, and indeed during builds. You must be conscious, certainly on the build side of things, that you've got to try however you can to make sure that you don't that doesn't happen to you. So I mean, Peter, you're obviously working with MMC. They know what they're doing. They got a big balance sheet to kind of play with here. They're not going to be financially stranded if they do get it wrong. But is any concern from you about getting this over the line on time, on budget?
I'd say at the outset, this project was over-engineered in some ways, because we went to kick it off just as COVID hit, and so we had 2 years to continue to design and study. So it was very well designed. That was handed to the MMC and the EPC team, so we had a good head start on that. We'll spend about almost 2 years from the time we broke ground to do the pre-construction in late 23 to the time we say this is commercial. Right now, when you look at our all-in sustaining costs in the feasibility study, we were at $869. You throw in inflation, throw in the increased cost of royalties just on the higher gold price, you're probably looking at a 10 to 15% increase on that front. And I don't know what the end of the day number will be on our 100 million capex because we'll see when we get there. But I'd say a similar range. You're probably in that 10 to 15% increase over where we started. But in the big scheme of things, in comparison in the industry, I'm very happy with where we are today, and we expect to be, close to schedule. We were saying Q2 first goal will probably slide into Q3, but hit commercial in the latter part of Q3 as well, commissioning in Q2. So all in all, again, on a comparative basis, very pleased with where we are. We're about 70% complete as we speak, and even though we're in the depths of winter now in Mongolia, performance is good. Like we've been returning about 2% completion per week over that December period. So very pleased with that because I was concerned about that as we move into that cold weather season.
Interesting, actually, just before I came on here, I got an email through from someone at Orano, it's a big uranium company. They just, Mongolian Parliament just approved, I think on the 10th, their project
Interesting. Yeah,
in
very
country.
exciting.
Yeah.
$1.6 billion project. They're going to be the sixth largest uranium producer in the world, alongside the fourth largest copper mine in the world. So Mongolia is really starting to hit stride here. I'm hoping we can fall into that category in gold production here as we move into a few years from
Yeah, I just wanted, while I remembered that one, because it
now.
was sent through by one of the directors of Orano to me just before we started. So, I mean, back to you, Alex. I mean, I guess same sort of question around, how do you make darn sure that this, I know you've done it twice before, which is good news, but what are the things that you're looking at to make sure you're mitigating all potential risk?
Well, it's all about controlling what you're doing on the ground. And as I said, we came up with a fixed price contract with our plant engineer. So that's helped us in that regards. The rest of it's pretty straightforward. If people look at the photos that we shared a link with our press release today, and you look at the topography we're dealing with, it's very conducive to setting up leach pad, PLS pond, plant site, etc. And that's all we have to worry about. I mean, it's a gold run of mine heap leach is pretty straightforward. So we just need to keep our heads down and continually monitor the progress, as Peter mentioned, and just see that we achieve our milestone marks in construction, etc., and also in costs. In our case, we've got $122 million of capex remaining. We haven't drawn down on any of the money that or the debt money that we've raised. So we've got $25 million of stream money that we can pull down on, and we'll do that shortly. We've got $100 million of gold prepay that we can draw down on. We haven't drawn on that yet. And we've got about $45 million US in the bank. And we've got a cost overrun facility of $20 million with Wheaton as part of this whole transaction. So we feel pretty comfortable. We don't want to go into cost overrun, obviously. But I think, you just got to, monitor things on a regular basis and just make sure you achieve what you say you're going to do.
Do you think you've got an extra set of eyes on you? Obviously, given what you've been through the last couple of years with the EIA, you have to be especially cautious.
I mean, the Dominga, you probably know this, Matt, because you know Chile as well. I mean, Dominga, the iron ore project in Chile was declined by the ministerial appeal that they went through, which is similar to what we went through. Now, Dominga is a project that's been around for a long time and has a lot of environmental issues related to it. So it wasn't a slam dunk. It wasn't an easy project. But because that happened, I've had a lot of people come back to me and say, "Well, what's the downstream effects of that?" Rejection to your project. There's got nothing to do with my project. I mean, I'm nowhere near Dominga. I don't affect the same eco system that Dominga affects, which is to do with the sea, etc., and sea creatures and animals and all that sort of stuff. So, unfortunately, because of our track record or in Chile and what's happened to us in Chile, we get a lot of questions, and maybe that's why we just haven't had a lot of the recognition I think we should have got so far with what we've achieved, is because people are going, well, show me, show me. And maybe the only show me we can do is that gold bar at the end of the day. So we have to wait till January for that. But the good thing is we're not looking for money, so that's good. And, we can...
That's an important distinction for both of us in being fully financed, because we talked about earlier, the number of development companies aren't many, but the majority of them are finding it a very challenging thing to find the money to get these things built. And here we both are fully funded, which does set us apart.
Well, I kind of love some of the companies last year who said, this market's not working for us. We got to try something different. We got to take control of our destiny rather than sit back and wait to work out whether we're going to be around at the end of the year. And obviously I'm trying to avoid obviously raising expensive money. You guys have done that, and there's a few people who've just said money sooner is better, and I honestly truly believe that kind of works. But you've also had to kind of construct some quite interesting financial relationships yourself. I mean, for you, Peter, you've got quite the mix of capital in there, and you've come up with a solution for what people perceived as being an explorer just 2 short years ago, 18 months ago. Do you think more people are going to start doing this?
I think they have to if they want to follow that game plan we talked about earlier. And I think Alex is right. You're in this business, you can't rely on the public markets. They're just too fickle. And if you want to secure your future in this business, you have to go out there and do it. You have to build it. You have to get the cash flow and find a mechanism to do that. In our relationship with MMC, it was a fantastic opportunity for us to align ourselves with Mongolia's sort of preeminent private mining company with a octopus of companies that can build a new mining district for us and bring us the money. So that was a unique opportunity. But yes, you have to find other ways to do it than just depend on the equity markets.
I know you've got Eric Sprott in there at 19%, but he used to be the go-to solution. But I think these sort of more complex structures, EBRDs in there, I think as well. It's got to be the way to go. For sure.
And for us, I think it was more than about the money. I think, as you talked about earlier, a lot of companies can say they're going to do it, but you need that expertise, first off, to build it, and second, to operate it. And that's what our partner was able to bring as well. And not a lot of companies have that bench strength as Alex's team does to be able to pull these things off.
Been there, done it, got the T-shirt, Alex, right?
Yeah, but still, it's it's not what happened in the past. Everybody focuses on what's going to happen.
We got to deliver.
Yeah, right. You got to deliver. Well, guys, your last message from each of you, Peter, to your shareholders, anyone thinking investing in your company?
I think this is a tremendous year for investors to be looking at investment in the commodities business. I mean, we're gold focused, and I think for the reasons we talked about earlier, a great time to be looking at investment in the gold sector. But I push that into commodities too, that, whether it's largely the electrification, copper in particular, that people should be looking at. But I think that we're going to see investors looking for different homes for their money. The equity markets were returning phenomenal amounts last year. I think just putting your money into the S&P will not be quite as straightforward this year, and that gold will be a haven for some of those funds, will result in companies, particularly those close to development and cash flow, benefiting from that.
As I say to a lot of people, we're a long game. Right, Rio2 is a long game. It's not a short game, and you've got to be willing to just hang in there as we hit our mark, as we say we're going to do. And our first year of full gold production, which will be 2026, is going to be about 75,000 ounces. There's a ramp up to 100,000 ounces, so the first year is going to be around 75,000 ounces. We predicted that our AISC would be around 1,250, and there's a few things, moving parts there. Labour, which is obviously positive. Fuel might be a little bit negative to what we used back then. Not much, but a little bit. But when you look at it, let's say we have a margin of $1,000 over our AISC. I mean, that means we're going to print $75 million next year, and that's going to cover, a lot of this prepay, etc., that we're going to be taking down. But it's going to be putting us in a position where we're going to be hopefully accumulating cash going into the end of next year. And so that's why I say it's a long game. It's not, instant gratification. Play that game, and then you go into 2027 and you see us do 400,000 ounces a year that year, and depending on what the gold price is at that time, we start to look quite interesting from a cash generator perspective. So I always say to people when they look at Rio2, think of a 3 to 5 year strategy. We're going to be in this, and that's going to be getting the first stage of the project up and running, and then getting the second stage either built or on its way to being built, and us seeing our gold production go from about 100,000 ounces to 250,000, 300,000 ounces a year. But that's not going to happen until, let's call it, year 4 or 5. So you got to be in this story, if you want to be in this story, for that long play. If you want to go for the sexy hits and drilling and etc., there's lots of other companies out there that are doing that. But with Rio2, it's a little bit different. So that's all I can say to people about our story.
Well, I think if people look back at their own portfolio investments for the last 4 or 5 years and look towards their exploration type returns, I think the smart bit is looking back and saying, look at the one I picked was successful, and we won't talk about the ones I wasn't successful on. So what you guys bring is a bit more certainty, a bit more de-risked component. So the long game for me certainly works. Gentlemen, thank you very much for your time today. I'm excited for both of you in 2025. Stay in touch.
Thanks.
Okay, thanks, Matt.